Hiya, welcome to my Compound Life. I am Jonathan. This is a channel where we build assets, we build habits, and of course we build freedom. That will be financial freedom, time freedom for you, me, and anyone else that watches my video. So if this is new, if you're new here, or if you are current viewers, welcome. It's always good to see you. If you're a new subscriber, do me a favor. Just leave a comment down below. Let me know who you are, where you're from. It's always great to hear from subscribers. Okay, so today what I want to talk about, so I've been pondering why specifically this Bitcoin cycle, it's so much different than before, right? So every 4 years, Bitcoin does this thing, it's called halving, the halving event, right? Which I think you guys know about this, or very likely if you're a existing viewer, I talk about this all the time, right? So I think towards end of November, coming November, that will be the start of the 500 days before we get into the next Bitcoin halving event, right? So sometime even in some of my video thumbnails, you actually see a small little countdown clock, right? That's where I'm trying my very best to make you guys aware that the Bitcoin halving event, it's in the horizon. It's just a matter of 3.5 years left. So this is why every time when we go through Bitcoin halving, the phases, the first year will be the bear market, right? And then eventually followed by 3 years worth of bull market. So the best time to really buy a lot of Bitcoin while you can afford to, it's usually the first year of that bear market, right? So yes, every 4 years, Bitcoin does this thing called the halving, and every 4 years we hear the same story. Bitcoin halving is coming, right? So that's why I'm talking about it a lot to you guys, asking all of you guys to stack up cash and be ready to buy in Bitcoin at the low, right? And always, you're gonna hear about this supply shock is coming, right? Because after the halving event, right, essentially this cycle, there will only be 3.125 Bitcoin that gets minted at every block, okay? After the halving event, only 1.5 Bitcoin will be generated at every block, right? So the miner reward will essentially be half, right? So this is why everyone's calling out supply shock will hit the system after the halving event, right? And as a result, numbers goes up. The cost of Bitcoin will shoot up about approximately 500 days later after the halving event. And yes, historically, that means price did go up after each halving. But today, I want to say something a little bit uncomfortable for even me to digest this, right? Because this specific halving, this specific Bitcoin cycle is not like the others. And if you're still thinking in the old cycle term, which I constantly emphasize on all of my video, right? Essentially, that showcase that I haven't moved on, I haven't factored in so much more changes this time around in the halving that I might be missing the bigger picture, for which this is what I want to bring home today in the video, what exactly is the bigger picture, right? So this isn't about hype anymore. This is about shift in who owns Bitcoin and why, right? So why is this Bitcoin cycle so radically different, right? So I think one thing for sure, it's a accumulation or a cycle that's moving away from retail hype to kind of like a global adoption, global shift. I mean, I can't say global shift or global adoption because itself, Bitcoin has always globally been adopted. But somehow, I think maybe it's much more wider adoption from retail hype to a wider mass adoption this time around. Okay, so in the early days, as a recap, Bitcoin cycle were driven mostly by retail investors. So people like you, me, where we'll discuss about Bitcoin. I reckon there were a lot more Bitcoin video many years back versus nowadays, right? People discuss it in forum, Twitter, X. It's called X now, by the way. Reddit, and people talk about fear, greed, panic selling, FOMO buying, etc. And they purely just talk about the price action, right? Back then, Bitcoin was still trying to prove it wouldn't die. But in today, Bitcoin is it has definitely shifted away from that. Bitcoin is no longer fighting for survival because it's already proven that it will not die. It's already proven that it's the new form of money currency replacement, right? Now, Bitcoin, it's kind of fighting for position in the global financial system, right? And that's a very different game, right? So that's why you constantly see, the clarity bill that's trying to be passed. More banks are trying to suppress Bitcoin, not allowing it fully into the system yet. Countries not fully accepting it, knowing that, this could well affect people storing value that, that the government cannot see, or even the HMRC rolling out more framework just so that they can track the movement of Bitcoin, etc. Right? So it's fighting a very different game now, and that's why it's so much more different compared to the many cycles before. And second thing, I felt why Bitcoin is so radically different is this time around, yes, it's the institutional tsunami that's coming, right? Or that's already came in, by the way. So obviously, we just talk about the few elephant in the room: strategy, MicroStrategy, BlackRock, Fidelity, and other Wall Street giants, of course. So these firms don't chase hype anymore, right? They're not like any ordinary retail investors that follow closely on the 4-year cycle, that they'll accumulate as much as possible during the bear market and try to hodl for at least 2 to 3 years and then start selling off at mass, right? So this kind of institutions buying are a lot more different. They don't really FOMO in and panic out. They definitely build multi-decades position, they'll just continue to buy. Well, I take that back. I mean, look at the ETF. They are even worse than us, the retail investors. They will always FOMO, panic sell the next day, right? So the kind of buying are a lot more different. And of course, we know that spot Bitcoin ETF changed everything, not because of price, but because they kind of open up. Sorry. Let me just move my car a little bit. Move my car. Sorry, guys. So yeah, I think, the ETF kind of changed everything, not just because of the price, but because they kind of open new investment product, new doors for pension funds, insurance companies, and institutions that were never allowed to touch Bitcoin before. Now they can. Okay, so this is not retail money trying to get rich quick, but these are all slow, patient, structural money that are piling into Bitcoin. Certainly, they always rebalance their portfolio. So that's why, it always leads on to heavy sell, heavy buy in a very short period of time. And somehow, I also felt it could well be suppressing the Bitcoin price. It could well be capping the Bitcoin all-time high, because there isn't retail FOMO buying in anymore, because every now and then someone will have to have some sort of rebalancing in their account, right? So that alone, I think, really makes this cycle so much more different. And of course, other thing that I felt are very different. I think one thing for sure, Bitcoin is a grown up, right? So think of Bitcoin like a person. 2013, it was a rebellious teenager, right? In the 2017 Bitcoin cycle, it was a loud university student, right? Makes so much noise. I think during that time, Ethereum also made a lot of noise too, apart from, at that time, Bitcoin was making enough noise to really call out the value of store of value at that time. Ethereum, I think it made so much noise, making it unique because it has that smart contract associated with, with that blockchain. And then in 2021, it was still figuring itself out for Bitcoin. But now I think Bitcoin entered adulthood, right? It's being discussed as a treasury asset. It's sitting on balance sheet on a lot of big companies. It's being regulated, right? It's being much more regulated, audited, and understood, even if people still disagree with it, right? And of course, regulatory clarity doesn't mean government love Bitcoin. It just means institution finally feel safe enough to allocate money into it, right? Like a little bit like Bank of America recently suggesting or to allocate at least 4% into Bitcoin. Somehow, I don't know whether that 4%, is that a good thing or a bad thing, because everyone gonna treat that like the playbook. they'll allocate 4%, and the fact that Bitcoin can be highly volatile, it can grow very, very fast. The growth, the CAGR can be very quick. So that's why people start to rebalance and move that, whenever it exceeded that 4%, they'll reallocate and move that into something else, right? So I don't even think whether that's a good thing or a bad thing, right? And that's huge. And of course, I think it's so much different this time around. I think it's not just digital gold anymore. People still say Bitcoin has no utility. That argument, I think it's old now. I think people definitely see multiple usage of Bitcoin, like the layer 2 networks, the payment rail, the enterprise integration of Bitcoin. So Bitcoin is becoming more usable without changing its core principles. And here's the key point. Bitcoin doesn't need to do everything. It just needs to be the best at one thing, right? And that thing is scarce, right? Only 21 million coins. We are already 19.75 million Bitcoin already minted. So it's very, very scarce, right? And the government cannot just come in and print an infinite amount of Bitcoin. Having said that, no one owns Bitcoin. It's a global currency. It's a global digital gold that no one can control or decide how many that gets minted or issued. And also it's a neutral money, right? I said that before. No government can control it. No central government, no central entity are controlling it, right? And of course, Bitcoin, I think very different this time round is the supply shock hits differently this time, right? So because every halving cuts new Bitcoin issuance in half, okay? That's not a theory, that's simply just coded, okay? But here's what's different. In previous cycle, demand was mostly retail driven. Now demand includes institutions that buy every single day regardless of price. Like look at Michael Saylor, he's constantly buying the top, right? So we have less new Bitcoin being created or minted or mined, more long-term buyers absorbing, gobbling up the supply. Fewer coins available on exchanges. So this isn't just a supply shock. It's essentially in the system, every single Bitcoin are being squeezed out by all of this institution. And traditional model don't fully capture this. This is what I felt, right? Like, I follow a lot of indicators to try and determine the all-time high for Bitcoin. And I think it's because of all of this, right? Not driven by retail hype anymore. So that's why traditional model cannot quite capture like the recent all-time high in October the 8th, 126,000 Bitcoin. Essentially because Bitcoin has never seen this type of buyers before, right? So this kind of bring up that question whether the 4-year cycle is broken. My honest answer or my interpretation to all of this, I don't think it's broken, but I reckon it's evolving. So human behaviors, essentially, they'll never change, right? Fear and greed continue to exist, right? I think we are in a fear zone now. No one wants to talk about Bitcoin. Everyone's afraid of Bitcoin. everyone would think, you know what, what's a safer investment to put my money in that I wouldn't be affected by tariffs or the Japan bond yields rising. So everyone are putting their money into gold and silver, although the fact that Bitcoin does have the characteristic of storing value without central government, right? But people are still storing into gold. I know it's frustrating, but at the same time, I kind of felt these are just human behavior. As long as certain asset price goes up, it will have that awareness and people will just pile in. And it's just a matter of time that Bitcoin price needs to go up and then everyone would all of a sudden return, right? So this makes you and I much more resilient in terms of the whole situation right now, okay? And yeah, I think my honest take, it's not broken. Bitcoin cycle is evolving. Human behavior hasn't changed. They'll always come back in when the price is high and ended up buying high, selling low. That's normal human behavior. So as a result, volatility will still exist, but what it means will be the shape of the cycle may be different, right? Instead of explosive blow off top with brutal crashes, like Bitcoin crashing 50, 60, 70%, right? What we might see, it might take longer for Bitcoin to reach the next all-time high. Okay, so what I'm saying here is we could actually see an all-time high after all, right? But it takes longer. So it might be the fact that the October 8th, 126,000 wasn't the Bitcoin all-time high. It was just kind of like the preparation for us to get to another all-time high. And of course, because of the institutions buying, the rebalancing of their portfolio, I think all of this will definitely move a lot more slower. And of course, with higher floors. So all of this, that doesn't mean number only goes up. It will continue to be volatile because there would still be heaps of people always on leverage, right? That's just waiting for exchanges or market makers to liquidate them, right? But it means Bitcoin is starting to behave more like a mature asset class that has less volatility, right? And not a meme trade anymore. Like look at all of the stocks and shares. You know, it's stocks and shares goes up and down all based upon narratives that's coming from the Fed, President Trump, you know. And in recent case, even for like you look through S&P 500, NASDAQ, you know, with the issue between US and Greenland and Europe tariffs, I think it only affected smallish on the stocks price. I think maybe 5%, 6% or less. And even if you look through the last tariffs, the global tariffs that Trump tried to roll out, that definitely also affected the market. I think it only dropped a small 15%, right? Guys, 15% on Bitcoin, that's like nothing, right? So this is why I'm kind of thinking that moving forward, for Bitcoin to mature, it's going to come to a point there will be less volatility. In a way, it's good for a lot of us that cannot stomach that great of a volatility. But it's going to be a limitation for us that are trying to make more money from Bitcoin, because, you know, I always talk about we need to have a hodl bag that will never sell, as well as a swing bag that we buy low and sell high. If the volatility is only like 15, 20, or 30% and not 70%, that means we're going to be missing some of that gains, right? So after all of this, what does it mean for us, right? This is where I want to bring all of this back to you guys. This cycle is not about timing the top perfectly. It's not about selling everything at peak euphoria, right? It's about positioning. It's about treating Bitcoin like a bank, treating Bitcoin as a new transformed bank, and you need to be in for the longer term game, right? Treat it as a new replacement of the traditional finance. This will be your new longer term financial rail. Then the real questions isn't how high can it go this cycle. The real question now is, do you want exposure to a world where Bitcoin is no longer optional, right? We all need it. And this will essentially be that replacement. It's there. It's finally here, right? So yes, I think Bitcoin halving still matters. The supply shock still matters. Cycle definitely still matters, right? But this time, the story is bigger than the price, right? And it's the moment Bitcoin starts acting like, you know, less like an experiment, but more like a new infrastructure for our financial system. And this is why this halving feels radically so much more different. And to be frank, consider yourself very fortunate that you have heard about this Bitcoin, the internet money, early and have exposure to this, right? And we can continue still to make good money from it, but we definitely need to be early and act fast. Okay, so if you like my content, hit the like, hit subscribe. Let me know your thoughts, right? Let me know your thoughts. What do you feel about this cycle? Yeah, do that. I'll see you in the next video. Bye.